Hey everyone, Dan here. We are after hours on Tuesday, April 13th, and we're going to accomplish a couple of things today. One, we're going to look at two of three stocks that I don't think we've ever looked at before, Alibaba and Zoom. Palantir we've definitely covered before, but wanted to jump in, since they have catalysts coming up. And also, I wanted to basically go through these charts from scratch, show you what I'm seeing both on the trend analysis as well as the indicators that we like to frequently look at. And I'm going to do that all for the first time in real time as you're watching the video. And that's because some folks question how I come up with some of the points that I make. And I think that that's both out of skepticism and also out of the want to be able to reproduce it themselves. And so hopefully this will sort of pull back the curtain and provide some insight into that. In any case, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. The other thing that helps a lot is if you share these videos on Reddit or Twitter or Facebook or wherever you might share things. Okay, so Alibaba has I'm not super up on the news cycles, but so I'll sort of give some loose news as I know it. I'm mostly a trend and chart guy, but obviously go double check these things to verify for yourself. But my understanding is Alibaba has pushed up recently, as you see down here, because it has sort of taken the hit in terms of, whatever crackdown is going to happen with the Chinese stocks as far as BABA goes. And I think folks are kind of feeling a sense of relief and coming back in knowing that sort of like that, kind of cloud that was looming over its head has been taken care of. Again, double check that because I'm not 100% certain on that. But I ran out of time to double check it myself before making this video, so sorry. But anyway, this is the 4-hour chart. This entire area that we're looking at right now encompasses 6 months. As we're going through the chart, ignore this giant green line. It's an anomaly. It's a glitch in the chart. So we're just going to ignore that and pretend like it's not there. One interesting thing with BABA is it is constantly creating gaps. You'll see a big one in recent days there. But I mean, all over the place there's gaps, but I think that that's just a byproduct of what the stock is. I don't necessarily think that it is a frequent filler of gaps intentionally. Like you'll see one up here, and that's way back from November 10th. That still hasn't been filled. This one hasn't been filled from February 19th. So this is one of those that sort of like, I think it fills the gaps just because if you look like, if you wait for a gap to get filled for a long enough period of time, it will eventually get filled just because the price changes. So we're going to ignore the gaps on BABA because the more I looked at it, the more I thought, it's not really filling gaps. I was at first very excited because I thought it was. It had all these gaps. But let's take a look at some trend lines that are taking place. So there's this we're going to have this capture about 95% of the price activity. And I don't know how far we want to draw it out here, but this is basically, I'll put this in red because this is the downtrend that BABA has been caught under the weight of ever since it was up here, about 318, and it hasn't been able to get anywhere near breaking out of it. Has had a series of just either downtrends or consolidations with one brief point at which it tested that trend line, which actually is what developed the trend line. But, now it's getting close to testing it again, so that'll be an interesting thing to see. On this chart, you'd be looking as it approaches about 250 or so, should be a really interesting level in terms of, if it can break that trend line. That would be a big deal, obviously. The other thing, trend line wise, would be from here, if we take it up and capture most of this price action, this uptrend is sort of on a collision course eventually, and we might as well kind of draw it out so that they collide. It should at least capture some of these. All right, so let's put that one in green since that's an uptrend. Just knowing that if it does fall, one place that we would want it to get caught would be at this green trend line. And that would kind of maintain any sort of like higher lows that it has started making. It would maintain that like bullish position. The other thing that I'll look at, a few zones, and we're not going to go up super high, but let's put some price targets in here, both on the southern end, on the downside, but also on the upside. So, I would expect, based on this push off here and this previous support here and this previous support here and here, that we should get, I'm going to put this in yellow because to me this would be a cautionary zone. Like if it breaks this cautionary zone, just be careful. The next thing that you're going to want to look for is for it to get caught by this green uptrend. So that could play out, that could drop it back down into the 220s, but we'd want to see it get caught there. So for that reason, I don't have a position in BABA currently, but if I did, I would basically be looking at something like a 220 cut loss. And just keep in mind, when I chart these cut losses, I wouldn't, so if I see a zone at 220.28, I wouldn't literally go into my broker. And again, this is just me. You should make your own decisions for your own risk to reward tolerance level. I wouldn't necessarily go in and put a dollar figure as a stop loss for 220.28. Probably what I would do is I would set it at something like 219 or so, and basically give BABA a chance to dip below this briefly if it needed to and regain support there. That's if I had a lot of conviction in it and I didn't want to sell out unnecessarily. It also depends how frequently I'm watching the stock and if I can make manual decisions on the fly, or if I need to rely on stop losses that I set, that sort of thing. I would look for that. I mean, if you wanted sort of a cautionary zone, if you will, I would say cautionary zone between these two yellows makes sense to me. Sort of like an initial cautionary and then secondary cautionary zone. And, those are just to say, if things aren't looking super prime or you just don't have the tolerance to hold all the way down to 220, then, you could look at using those yellow zones for a tighter stop loss, or that green upward trend line. Let's look on the upward side, because I think that's what folks really wanted to know about. I would look for really good support to be held here. This is currently about where it's at, and that's not why I'm drawing the line there. I'm drawing it because of this resistance, and then this support back here. And it also was caught up in a lot of the resistance in this area. So a lot of influential price activity at that level. And so hopefully it can hold support there. That would be holding support at, let me get that exact level, 241.42. So it's slightly above that right now. So if it dips down to 241.42, we would look for it to build immediate support there. And then on the upside, I don't know how quickly folks would want to start taking profit or trimming positions. To me, this 251 would be the first level if you wanted to sort of have a quicker in and out. 260. These don't sound like they're tight, but they're kind of tight because the price is so high. So as a percentage change for the stock, that's quite a bit. And 266, and let's throw one higher. I would say about here. Okay, so for the folks that are wondering how to throw these price targets in, again, I just look for supply and demand zones, aka previous support and resistance zones. So a lot of consolidation slash resistance here, a lot of support previous to that, including here and even back here. For the 251 level, for 260, resistance there, that it dropped off of, resistance here, previous support in that area. Okay, so that's all that I look for as I'm drawing these targets to trim positions on. And again, if you're not sure what trim positions means, let's just say you took a position right now, it's at 242, and the price starts to go up. And say you have 50 shares. As it gets to 251, you might decide, okay, I'm going to take 15 shares off the table. So I'm going to drop my 50 down to 35 shares, and I'm going to lock in my profit on those 15. I still have 35 shares to ride to the upside. And maybe you say, okay, so now my next target is 260. And at 260, maybe you sell off another 20 shares. Okay, so you've locked in 35 shares of profit in total. You have 15 shares left, and then you can decide, if you want to hold them for longer or trim some out at 266, 272, that sort of thing. So that's what I mean when I'm talking about trimming out a position. And as the price moves up, unless you have a reason to want to do otherwise, I would also consider moving your stop loss up. So if you get to 260, you might want to set your stop loss at 250 or something like that, assuming that it should get caught. If it comes down, it should get caught by that 251.41. But if it can't and it drops below and gets stuck under, knowing that it might drop back down to 240, you might want to set it at 250 just in case that happens, and it can't get caught by that level. Okay, so that's the charting. And now for the indicators, let's go with first the MACD. So on the MACD, we obviously have big bullish sentiment here, but just realize that this is growing after declining. So from here to here was declining, from here to here was declining, and here to the most recent greens was declining until this big move up. So, there is that to keep in mind. I don't see any bearish divergence, which would be when the price is moving up, but the MACD starts moving down. It seems to be tracking together. I would be careful because the MACD, the yellow line, is about, or looks like it may be coming to cross over the blue signal line, which would traditionally be considered a sell signal or taken as one point of a series of sell signals. If you've taken many different factors when you decide to buy or sell, that would be one factor to consider on the sell side. And the blue is coming in very steep. So I would just be careful if this yellow really makes a turn and starts to come down and there's a steep crossover here. That's often when you get really big moves. Look at how steep the yellow crossed over the blue here, and you had this very big move up. As the crossover gets steeper, the more likely it is to be a big move that's about to take place. So just keep that in mind. So I would watch that. Again, this is on the 4 hour if you're trying to recreate exactly what we're looking at here. That's the MACD. For space sake, let's get rid of it. Pull in the RSI. RSI is very high, as you would imagine. 64.92, 70 or above is considered overbought, and you would expect some cooling off. Obviously, it has spent a long time being cooled off. 50 is the midpoint. So, if we want to say, that anything below this is considered definitely cooled off, still much, much more time on this area of the chart has spent being cooled off than it has being lit up, if you will. So it's really just recently that it's made this push. Oftentimes what you'll see is a double topping through this area. In other words, a lot of people, when they play RSI, and this is if you get a little bit more, I guess, familiar, I don't want to say advanced, but just more familiar with it and you feel like you have a good grasp of RSI, a lot of people will play the second coming of the overbought or oversold, meaning what they'll look for is for it to have come above 70, which it did here, and then come below 70, and then they're going to look for it to not drop below 50. So as long as it doesn't come below 50 and it starts to come back up to 70 with a pretty strong motion, a lot of people will buy in and they will ride it up until it's over 70 again, and then they'll sell out on that time. So a lot of people use sort of the first time that it gets over 70 as just sort of an indication of a possible trend. And then when they see it not drop below, or I guess hold the upper half of the RSI, meaning not drop below 50, and make another move toward 70, that's when they buy in. But again, just make sure that you're not buying in too close to 70, because then it's likely overbought again. If you see it make a good move towards 70, we're talking about you're getting in at something like 52, 55, 57, something like that. And with the idea that you're going to ride it through 70. That could always turn against you, of course, and that's just one data point in all of the analysis that you do to take a buy or sell position. And but you know, just to sort of throw that in there, that is a strategy that some folks use. So that could be presenting itself in this case. For the, I guess, do we want to look at the moving averages? We could. You know, all pretty good signs here. So the price action has established over the 180. So we would now consider ourselves in a bullish trend, very new though it is. And the 12 has crossed over the 180. That's another good sign. If things hold up well, the 20 is going to cross over the 180. That would be another good sign. And of course, the last one to cross over, for the way I have it set up at least, would be the 50. That would be an additional good sign. If that happens, we would flip the chart as far as the MAs are concerned upside down, and you'd have it the way that you want to be. You'd have the 12 on top, the 20 just below it, the 50 just below that, and then the 80 on the bottom. That would sort of show that you are in a true bull trend. All right. Hopefully that makes sense with Baba. Good luck if you're in that one. That's about 15 minutes on Baba. So let's go to Zoom. So Zoom, let's get rid of all this jazz. And let's do the same thing. Let's start on the 6-month, 4-hour spread, and just with the blank chart. So you see, Zoom has been in this downtrend as well. Zoom, my understanding today, the green action that was here was basically based off of Johnson & Johnson's vaccine getting halted, I guess is what happened. And so folks are thinking, you know, maybe the work from home thing is sort of going to get some second life breathed into it. I don't know that it's going to go away at all, so I don't even know that that's a consideration. But yeah, my understanding is sort of like that's why some of the stay-at-home stocks got a pump today, was because of the J&J vaccine halt. But let's grab. There might be a trend line here. Because I'm doing this in real time, sometimes I don't exactly know if the thing that I think I'm seeing is going to pan out very well. I mean, this is pretty solid. If we want to say that this is about at the downtrend line, you know, that encompasses way more than 90% of the price activity. So let's just say there's a good stab at the downtrend. This uptrend, even more so than Baba, is more fresh, more in its infancy. So this trend, let's just put them where they're going to collide. So let's say about here, this one in green, because it's an uptrend. And so, you know, this is where these two would collide toward the end of the month, the 26th or 27th of April. And so, you know, you might see Zoom sort of staying in between these two. You may not. Like, to me, flagging outs aren't the most profound kind of charting. To me, channels is the way to go, but you know, there's just not a channel here. So this could be developing the start of a channel here. This is going to be a little off, but let's see. So it could be developing something like this. This is not exactly parallel, but you know, in a best case scenario, Zoom moves up and sort of follows this, or I mean, this could even come up further, you know, like this, and kind of work itself up pretty aggressively toward that, up and over that red downtrend. But something to watch to see if a channel does develop here on the way up. That would be a more ideal scenario for me. But for now, let's just look at the trend line. So let's say at least there's hopeful support there. On sort of cut loss areas, you know, it seems pretty obvious to me. Unless you really wanted to hold down into the 200s, I would get my cut loss here right around 300, and just say, you know, if you have to jump out there and look for a re-entry back in, so be it. Some potential cautionary zones would look like here. You should get a hold there. So if you don't, I would just be careful. Oh, hold on, this thing is being wonky. Let me get out here. Trying to turn this yellow. Okay, I got one of them yellow. So let me get rid of the blue. Oh, holy smokes. Okay, let's just do that one again. So yellow line here. So folks, this is both the benefit and the hazard of you watching this without me doing it in advance. You have to watch at all the little like chart wiggle worms that I have to sort out as I'm trying to get things sorted. All right, so that'd be my cautionary zone, or if you wanted to have a more aggressive stop loss, if you're like, yeah, I'm good with stop lossing at 314, then that would be like your more aggressive one. I would look for immediate support right here. If this isn't obvious, this is because resistance, resistance, support, support, okay? On the yellow, support, 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 and on the red, support, support, okay? Same thing as we talked about on BABA. That's how all these get drawn in. You just look left and see where previous support and resistance lines up with recent support and resistance, and that should say to you those are pretty strong supply and demand zones. You should set some targets around those areas because there's likely to be some buying and selling in extra velocity or activity in those ranges. Those are rife for maybe not trend reversals, but at least sticky situations, meaning it's going to hit some resistance or it's going to gain some support and kind of jump off really quickly. And some of them get pretty sticky, like 372 to 379 as a percentage is very, very small percent, but it's likely going to be a bit of a sticky range for it. Okay, so this is probably enough targeting. This gets us up over 400. So if anyone's making 60 or so bucks a share, I think that's plenty to deal with for now. So again, best case scenario, walks itself up the green or doesn't even come anywhere close to the green, but just gets itself out of the red downtrend, gets support at 347, gets support at 355, 372, so on and so forth, and just walks itself up to these price targets. On the downside, catch itself at the green uptrend if it does come down. If it falls through it, get caught by 314 yellow zone, and if not, my cut loss, though I don't have a position, but if I did, 301 or below, so I would, if I were to put it in my brokerage, I would probably just put 300, call it a day. But, do what you think is best based on your risk to reward ratio tolerance. All right, I think that covers it for Zoom. Let's move on to Palantir. So Palantir has this double click event tomorrow, I think. And so I think the idea here with this push today was that there's, some hype around that's developing. And so that's, what folks are looking at. To its credit, it's to 25, which it seems like for the longest time, it's, 24, 28 or below, like literally $24.28 or below. I think that was Palantir's big sticky zone, if I'm not misremembering. But, obviously this one, we could draw this out just for good measure, do the exact same thing, 6 months, 4 hours. If you look at it from this perspective, the interesting thing here is you could say this is like a giant long-term trend support line that you could draw out here and just say like, this is where my, if you're going to hold a longer term position and look for like a cut loss, you could adjust it along this trend line as time goes on if you wanted, and just sort of say, that lines up with price activity that dates back to November. And so, something to consider with Palantir. Obviously, it's encompassed in there now. It looks like it's forming a bit of a mini channel, not mini channel, but a channel in its infancy here. So when something is like really, really new, you just want to give it some wiggle room. So like, in other words, this channel might be like wider when it starts to flesh out. So it might continue to do this. And the way that that's going to look in real time as it plays out is it's going to go over the top, and then it's going to kind of like continue to follow the channel, but it's just going to be on top of it. And then it's going to come back into the channel and you say, oh, okay, so the top should actually be up there. And it's going to fall to the bottom of the channel and kind of like still follow the channel up, but be along the bottom bound of it. And so then you can widen it out there. And again, that's just a byproduct of like this being a short period of time in like the vast scheme of things for the channel. And it's only tested the bottom now twice, like not literally 2 candlesticks, but 2 sort of like I would group these together and just say that was one big test of the bottom. That was one test of the bottom. I guess 3 if you wanted to include that one, and sort of tested the top really just twice. The most recent one being today. So, I guess this could be 3 as well. I mean, I guess my question is like, do we want to start from here? Do we want to like stem it back here? So that's kind of the question. Because that's just on the green line too. So yeah. So I would say it's tested the bottom twice, it's tested the top three times kind of. So I would say it's still a younger channel. So give it a little bit of leeway. But I would expect it, if it's going to actually form a channel here, that stays semi within these ranges. And that would be a good sign. That would give you something to play that would lead you back up into the 30s. Toward the beginning of May, so not too far off. And I think when Palantir first got beat down, like way back here, folks are looking for a retracement into the 30s way faster. So I know beginning of May sounds like holy smokes, we have to wait that long for all this to play out. But listen, at this point, with all that's gone down, take it. Just take it and run. The good thing is it's not caught in a down channel right now, so that's some solace. It has been under the weight, obviously, of this like downtrend, but I'm not even going to keep that in there because that's not going to be a big factor at this point. I don't think. I think the channel is more important. That longer term green uptrend support is going to be important. And then we should throw some targets in here for folks to keep an eye on if you want cautionary zones and cut losses and things like that. So I would say cautionary zone would be like here. It's nice that you get a cautionary zone and like a green uptrend with these stocks today. It gives you sort of like 2 areas to play off of where you don't have to feel like you're panic selling, but you're making a more sort of like definitive decision. I think I do currently have a stop loss on my Palantir position, which I think I have at 20. So that like pretty much lines up with that 2070 zone being charted here. On the upside, the biggest thing to me would be play the channel if it continues to develop. Take profit at the top of the channel, buy the dip at the bottom of the channel, and as long as it continues to hold the channel, you will make a ton of profits on many different occasions. But if you want a more like traditional kind of like hold it till it gets to this zone kind of thing, I would look for immediate support here. That's since you can't really see it, it's 24.90. I would look for immediate support there. And then I would look for, no one's going to sell out there, but 25.81 might be a little bit of a zone. FYI, but let's give you some better targets than that. If you wanted to start trimming at high 27s, that would be something. Even that's going to be almost 10%. So that's not nothing. And then my next trim would come here, just shy of 30. Which, even if 30 itself is in a zone, just sort of like the psychological whatever of the number 30, like changing to the next decade of numbers, if you will likely induce some kind of action from the buyers and the sellers. Probably a little bit tighter here. All right, so these get you some zones to look for up until... Yeah, they get pretty tight in this area, but the chart is also a bit of a mess in this area. So that gets us up to 35. Those are the zones that I would look at if you want to trim, or if you want to just say, I'm going to play the channel, whatever it may be. But that's what I would look for from Palantir. But yeah, good luck if you're in that one. I have had a position for a while, so I didn't buy in because of this double click thing. I didn't even know that it was a thing until like this morning. I think I saw something on it. So, but we'll see if it brings anything interesting intraday tomorrow. That could be kind of cool. All right. Anyway, no matter what you're trading, I hope you're off to a good start this week and that you're doing well. If you're looking for like, we didn't do the indicators. Sorry about that. Hazards of doing everything in one cut. MACD. Did we do this for Zoom? I can't even remember. We may not have. The MACD on Zoom, on Palantir. We have some decreasing pressure here on the bullish side. I think you're okay on the MACD. I don't think there's any bearish divergence. It is kind of just waffling back and forth over the signal line, so I would be cautious on that one because that isn't often like the greatest of signs, though it did start this like semi-steep crossover, and it's getting more and more real estate between the signal and the MACD line, so that could be good. And so then let's flip over to the RSI. We're pretty high, 67 right now on the RSI. But I think we're probably doing all right. Just trying to see if it can I expand this a little bit? Okay, there we go. It keeps like bumping its head against the 70. I mean, also it's had so long since it's been over 70. My goodness. So last time it was over 70 was January 28th. Even then it was just 72. And all these other ones, like it stopped just shy of 70, it looks like. So I think it's just, a byproduct of it having had so much selling pressure for so long in the market. This is also the 4-hour chart. So, it has a lot more lengthy price activity to take into account. So take that for what it's worth. So, you might be okay on like a slight dip on this one. Like it might hold the midway point for quite some time before it goes down to 30. So in other words, it might stay above like this 50 area. So that might be sort of like your oversold or dip kind of buy area as far as the RSI is concerned at this point. Okay. So that's the RSI. We could take a quick peek at the MAs, but I mean, as we would expect, it's moving to crossover. So all of these, the 12, the 20, and the 50 are moving to cross over the 180. The price activity just launched over the 180 today, so it's now considered in bullish territory, but it'd be truly in bullish territory once those other MAs cross over the 180. That might provide some extra lift to the stock price. I know we didn't look at the MAs on Zoom, but it's just sort of like, usually in this kind of a situation when there's a bump like this, it's just kind of obvious what it's going to look like. But just a matter of like whether it's crossed over yet or not, which to me wouldn't be like a deciding factor. So I suppose I should still show it just to like talk through it. But okay, this was a long one. Obviously you can tell in my one take charting fatigue, but hopefully that was helpful. And as I was saying before, if you enjoy these videos, I hope you get something from them. I hope that they're helpful, and I wish you the best of luck no matter what you're trading this week. If I didn't do any of those indicators, or I missed something on Baba or Zoom or Palantir, just tweet me or leave a comment, and I'll take a quick look and kind of let you know what it looks like on any pieces that I might have missed. Okay, thanks for sticking with me on this long one. If you made it this far through, I appreciate it, and I will see you in the next video.